Welcome, everybody. I am Jay Rosenthal. Two over that way is Jeremy Burke. He's my co-founder, our editor-in-chief here at Cultivated. In the middle is Mike Gorenstein from Cronos Group. We do this kind of on a quarterly basis to see what's going on at Cronos. I hope that's okay with you, Mike.
Yeah, I love it.
Okay.
Great. As long as it's still okay with you, I'll keep coming.
Yeah, totally. We don't make you put on a suit. We don't do any of that stuff. Jeremy, go ahead. I know you have a question for Mike.
Yeah, sure. So, Mike, thanks for joining us as always. It's always good to catch up with you. Just to kind of frame up the discussion, you guys reported earnings yesterday. Could you walk us through some of the top line highlights that you want to discuss for our viewers?
Yeah, I think continued organic growth, which is really good to see to close the year strong with record numbers. I think we had pretty significant growth kind of across the board. A big driver of that was, we've been talking about GrowCo. We did a 70% expansion, so it was on time, on track. I mean, there's still some efficiency ramp ups, but the early harvest getting out was really positive. So yeah, we were able to do that, and then also Israel continues to be a big strength for us. Continue to be number one market share. Continue to expand in Europe. And finally, I'd say we launched a product we're really excited about in Canada. If you tried Puffers, so it's our new all-in-one vape we've been working on for a while. So really exciting across the board. We're really happy about it and look forward to carrying the momentum into 2026.
Nice. I want to sort of dive into, I think last time maybe we talked about Germany, we talked about Israel. We didn't talk about the Netherlands, which I know there's movement there. Give us a sort of breakdown of Cronos in the Netherlands. And do you view it as a market that is, part of the portfolio? Do you expect sort of rapid scale up, or what's the position on the Netherlands, maybe even vis-a-vis other markets that you're involved in?
Yeah. So, it's funny. Everyone always is asking like what we're going to do M&A wise and like what we're going to do about Europe. And I think everyone always assumed that, that meant Germany. When I look at the Netherlands, I think back before the first time I'd ever seen what I thought was a legal cannabis sale was in Amsterdam, 15 years ago. From a consumer perspective, right? And kind of like if you think about California being an old market versus when it was legal, consumers have been able to go into this tolerated market in the Netherlands. We have these coffee shops that act as retailers for 50 years, and you can go and purchase product. And the way that the market works there is it's tolerated. So you're allowed to sell as a retailer. They're very regulated. You're not legally allowed to supply the retailers. But you're allowed to sell. And then in 2020, they put a law in that went into effect April of 2025 that said there were going to be 10 licenses and an exception to the restrictions on supply. They are allowed to supply within 10 municipalities a number of coffee shops. So that's obviously exciting because it's an actual adult use program. And what I loved about it is that if you think about Germany and UK and Switzerland, these other markets we're in, the end game is still going to be, I do believe, a mature market anywhere is going to turn adult use one day. And when you think about M&A, are you buying infrastructure that's still going to be there? And so you have to make sure there's a payback before it gets to where it's final. I think we kind of talked about this a bit last time. Yeah. The other piece would be well, there are markets where it may be close to final, but 50 years is a long time. So when I think about the Netherlands and think about is it a core market, first it's already a pretty large, business we acquired, right? Trailing 12-month EBITDA of, 28 million US is quite large. It's already the, industry leader there. And it's the largest, adult use cannabis business in Europe. And what I love is that the regulations allow you to have flower, vapes, edibles, hash, pre-rolls. So it is a full market, and all the work we've talked about borderless products before, all the work we've done in Canada to develop these products, we can go and port that over. So that's, I think that's really exciting. And I think that given where our other markets are, where we have a presence today, and if you think about UK and Germany as big markets, the Netherlands is right there. So it gives us a place to have real brand leverage. I think there's very, very strong cannabis culture in the Netherlands. So being able, to go there, not only with the brands, we acquire, but also bringing our brands over. So it's Yeah, it's a core market for us for sure, and I think it's a big market and has a lot of expansion potential.
Can I just jump in, Jared? Because I know you have a
Yeah,
question.
yeah,
But like,
yeah, go ahead. Yeah,
we actually talked about it on one of our shows last week, that the positioning of Canadian companies and the relative position relative to the world, they're actually in a stronger position to do exactly what we just talked about. And it's not only about brands and building borderless brands, but about the financial position, given sort of federal legality in Canada, to have a real public company like you actually make real M&A moves like you're talking about. Like, it just seems to me that the Canadian companies are a better position, certainly the American companies.
Yeah, I don't know if I'd put a Canadian versus American on it, because I think you can find there is a couple American companies that are positioned better than most of the Canadians, and there's a couple Canadians that are positioned better than most of the Americans. I think it's pretty company specific, but as far as the structure and where the focus is, I think that if you think about the capital disadvantage to being in the U.S., and I'm just saying this relative to Canadians, we're generally thinking of public companies. Because if you have U.S. operations, you can't really go on a major U.S. board. You're going to struggle to attract institutional investors. It almost doesn't make sense for you to then go and compete with people with the built-in lower cost of capital from institutions internationally. And since the international companies, are restricted, you have a more natural focus to just stay within the U.S. until it's federally legal. And it's a huge market. So I think that does happen internationally, where you're just going to likely see the Canadian companies do it. You see maybe one, to two companies in the U.S. go look internationally, but it's likely going to stay, I would think, this way for a while.
Mike, you have a pretty strong balance sheet. Cronos Group has a pretty strong balance sheet. I think the number was $832 million in cash and cash equivalents on hand. We've talked a lot about M&A, right? But there's clearly more opportunity to do M&A. So, given that you're integrating the Netherlands acquisition, you have a couple of things on your plate. Like, how are you thinking about all this cash? Because it's a pretty unique position for Cronos in the industry.
Yeah, my favorite opportunity is Cronos. So we've got a buyback in place, and
right,
keep being active with it. I think you'll see that accelerate. As the year goes on. So that's kind of first and foremost. I mean, I understand that we're almost like reverse levered with the balance sheet. But I would split it in two. And you saw us do two things, right? Like the one was, there's things that are investments. We did the the convert with with High Tide, but so we may look at other things like that help with yield. The year before we did the expansion with GrowCo. It's really, we'll scour everything and look for things that are strategically keep us on target, but also are creative. And so the Netherlands, I thought that we're able to do it in a way where we'll have cash flow coming back. It's immediately accretive to earnings. It was at trailing 12-month basis, 2.4 times EBITDA, and then we do a half turn each of the next 2 years. I think it's great because we weren't just getting a company that is profitable. We're looking at it as a platform where now we can port everything over. And so those are from a platform perspective, finding new markets where we can expand the footprint we have to take our brands and products and move them there. That then kind of expands what we already have. At the same time, the other things we're looking for are additional brands or products that I could take into our portfolio, and then with that increasing platform, I can push it out. So it's really two ways that we can expand growth. And when we're buying the things, it's not just an isolated, I want to buy this asset. It's not like just a private equity style. It's how can I, once I've paid, because you have to pay a premium usually to acquire something. So once we acquire that, how do I know I can create more value?
Can we shift? I'd like to talk about Canada and the position relative. You're talking about borderless brands, but the brands in this border here in Canada actually do quite well, have been around a long time. Sell-through rate is huge. Talk a bit about the positioning of your sort of two core brands, Spinach and Sours, here. And like, Canada is so mature. What can you learn in this market that others maybe can't learn in newer markets either in the US or other places, about sort of the sustainability of brands, how to build it, how to change it, how to innovate it. Because even most recently, you actually came out with new products under the same brand. Like the innovation is sort of top of mind.
Mm. Yeah, I think if you look high level, if you think about the ways to build a brand, there's always like three main ways. And the first would be distribution. It could be like the Amazon or Walmart, and that's not really our strategy, right? We're more on the product side. And then I think the other two, you could be a lifestyle brand, which is relatively difficult in cannabis given the marketing restrictions. Or you could be a product brand, right? You can build based off of the features, and then you get a reputation, and people sort of think that way. And that's the approach we've taken, is how do you differentiate? I think every brand, you're going to have some allocation of call it fluff and stuff, right? And if you don't have enough fluff, people aren't going to hear about your product. They're not going to know what it is. They're not going to know to try it. And if you don't have enough stuff, once they try it, they're going to be like, there's nothing here. I'm not coming back. So we try to lean in pretty hard on the stuff aspect. And, the fluff kind of comes more from people that have tried it, that go and talk to people about it. If you think about like the brand that and how our brand worked, that's our leading brand, is spinach. It was me originally coming up with like a joke, like a critique, and it worked because the product. I think if you think, like, I'll give you the example of puffers, what we launched, and like what that innovation was and why it matters. I think when you leave a house, there's certain things that you always make sure you have your wallet, you have your phone, you have your keys, and we really wanted puffers to be another thing you want to make sure you have and you leave and you like in your hands. So I don't know if you guys have had a chance to check it out, but if you feel the device, it's got a really like puffy, kind of squishy middle, and so it just feels good in your hand. It won't roll off of a table, so it can fit in your pocket, it can fit in a purse, it's easy to find. You've got a boost button, so if you want, some people want to get more draws out that are more subtle. If you push the boost button, like it's pretty powerful. Like you get some, if you can do it and take it without coughing, it's impressive. But it's something that it was functionally just like really worked, and we dialed in and we made sure we had the right flavors. So it was, it took us like almost like 2 years to develop it. And a lot of that was seeing where's there a gap in the market, what do people want, versus going off the shelf. I know there would always been questions like, why don't, the same thing we had with sours, right? Like, why do you not have a product out yet? Why are you taking so long with edibles? Why are you taking so long for an all-in-one? But if you take the time and you come out with something better, I think it will beat being first. And you just have to really look. So building a brand, to me, it's about building products. And if you build enough, great products, and then a brand will be built. And it's interesting when you think of the two brands as saying like spinach and sours. Sours actually is just sours by spinach. So we have Lord Jones, another brand, positioned right, more premium. It's not as main, and it's newer to Canada. But hopefully Puffers ends that way too, where it'll be like, I've actually spoke to people in Canada. And I'm like, I tell them what I do, and like, oh, do you know spinach? Like, no, I don't know. Like, never heard of spinach. It's like, oh, what do you, what's your favorite brand, or what do you like? It's like, yeah, I like sours. And you're like, yeah, funny, okay.
Yeah. Well, it's funny. You mentioned sort of things you don't leave the house with. It reminds me of the Adam Sandler song. Have you seen it, where it's like phone, wallet, keys? It's like phone, wallet, keys.
Oh, I think I lost you. I was hoping you were
Jay, we lost you. Uh-oh. While we wait for Jay's punchline, I can't. Next time I'm in Toronto, I can't wait to try the boost and see if I cough. Mike, I know we've probably asked you this question the last few quarters, but we got to ask it. Thinking about rescheduling in the U.S., there was no mention of cannabis policy in President Trump's State of the Union. Progress seems a little bit slow, although it exists. Given the lack of federal reform in the U.S., does this strengthen Cronos's international strategy? Does this kind of strengthen the market for Canadian operators, or how are you kind of thinking about that?
Look, I think we're in a unique position because if you think about, what we have and we don't talk a lot about like what our U.S. strategy would be, what we would be set up to do. Like, I think people do forget that, one, we don't have to, like, whether we were listed or not listed, we don't have to go raise cash. it's actually like, to take a quick, side thing, like,
Yeah.
when you think about our growth, an important thing is we have a declining share count compared to, peers of their expanding, share counts. We're doing it organically. When you think about the US and how we would enter, we'd be ready to enter, any day we have the brands and IP, but we also have a partner with pretty significant infrastructure. So I feel like, while it's been 8 years and it's easy to forget, like Altria does have the type of infrastructure we think would be extremely valuable, from, distribution, having a network of farmers, a lot of different, facilities that could be leveraged. So, we've got a partnership in the JV with the largest greenhouse operator in North America. And so obviously it wouldn't be like we were just coming up with a plan on how to enter. So I think it would strengthen us quite a bit. And the second the US opens, we are, we're ready, right? But, in the meantime, I think internationally, like the strategy is always, we're very optionality focused, and we want to know that we're fine either way, right? If the markets aren't opening, we can continue to grow organically. We're not stretched, we don't overbuild. And when markets open, but we have to be prepared to compete everywhere with everyone. Like that's my expectation everywhere. Right. It's like, I don't look for like, oh, this is a limited license. Like when you think in the US, like in limited license states versus open competition, eventually all the competition will come, and you have to be able to win. And you have to be able to win by having better products. And if you only have better products than people in one market, someone else eventually will get strong enough and they'll find a way to get in the market, and you have to be able to beat them. So I don't know if I think about it as like strengthening or not strengthening. Maybe there's more focus on international growth because investors don't focus on, on the US when it's not federally legal. But even if the US opened tomorrow, we would have an equal focus on, on Netherlands, on Germany, on UK.
Right.
It's just in addition. And that's the important thing about how we're preparing, is making sure we already have the portfolio ready that we can move in. Now, there might be different brands that we could then, more easily target in the US, to add on to the platform and also bring internationally. Maybe partnership opportunities would feel more natural, so you don't have to kind of contort yourselves around the option structures and the passive management. But
right.
For us specifically, I think that the advantage is if the US opens, we can move in, and so I'm not worried if you're thinking of it like keeps American operators out of international. You have to be prepared for everyone to eventually be everywhere.
Yeah. Nice to see you back, Jay. We were waiting for your punchline there.
I'm sorry. I my internet at home. So this is a Canadian thing. My internet is so crappy right now. I think it's because we lost at hockey. Everybody's just lamenting it online. So I apologize. I'm actually going to join from my computer in 1 sec. I'll be back in 1 sec. Apologies.
Yeah, no problem.
The other thing I'll say about that, and you're probably thinking of like export competition and people who are here to Schedule 3. Like, look, and I also I started a large investment fund in the U.S. So I'm pretty familiar with the U.S. market, right? Like we invested over $700 million, capital in the U.S. And if you think about the way that facilities were built for the most part in the U.S. Versus say Canada, a lot more CapEx went into Canada, like significantly more.
Right.
And,
right.
They also went in much more for aiming for scale, for national scale, versus the way you would build out in the U.S. is like, okay, I was able to get zoning in this place and I'm in this state. But a lot of the states, and when people were like, oh, the U.S. operators are more efficient. It's like, well, the difference is you don't have the government sitting in the middle, right? Your price that you're able to sell is a lot higher. But it doesn't necessarily mean your cost structure, when you're comparing it, is going to be more advantageous. And realistically, currency is going to factor in when you're selling internationally, and it's a lot cheaper. The Canadian, as much as the U.S. dollar is dropped, it's still a lot stronger than CAD. And if you built a facility in Massachusetts, or you built a facility in New York, like a lot of these, it's going to be very difficult to compete. You got to deal with humidity in Florida. So if you're in like Oregon or Colorado or Virginia or Kentucky, you probably have the weather advantage. You may be able to, for row crops and for extracts, have better better costs. But then the question becomes, is that going to meet the GMP standards, and how's that going to work? So I don't know if that's necessarily the angle that they would be attacking. And I think if you're in the U.S., you're likely more focused on the U.S. because if you were going to build a facility that's focused on exports, I don't know what the advantage of building that in the U.S. versus going, like the weather advantage between Canada and the U.S. If you think about currency, you might as well go to Colombia or to South Africa. If that's what the strategy is.
It's a good point.
It's why we had Natuera.
Right.
It's why we looked at Colombia initially. It's why we built there. Like, I don't know that I would change the strategy. I think that the U.S. advantages, there's tons of advantages to the U.S., but I don't know that export cost is going to be one of them.
I missed the question you asked before, so I'm just nodding along.
Yeah, no, all good. Yeah, Mike, is there any thinking of the next quarter, through 2026? I guess what in terms of the management of Cronos, like the balance sheet management, are you really looking to do? And I guess two, is there anything? We talked a little bit about the Canadian market, but is there anything in the Canadian market that's changing or that's exciting to you on the policy front, right? In terms of the political leadership, in terms of, reviewing the Cannabis Policy Act. How are you thinking about all of that?
Yeah, balance sheet, like shrinking the share count is important. Continuing to generate cash is important. I think the biggest thing for us overall is closing Canadalar is huge, right? That's especially with cash generation, that'll matter, and being able to start porting things over. Really important for us to continue, expansion into Europe, continue getting products over. I feel like we're through the ramp up phase now, but for GrowCo, that's, I guess it's, since we just reported, but it's also the end of February. So,
right.
From a reporting cycle, yes, for the first few months of, the year, making sure that we ramp up GrowCo. But in my mind, I'm like, okay, things are going well. We've ramped up. As far as what we need to do, or what I'm excited about, Canadian regulatory developments. Again, I think I'm like now the old, at least in terms of cannabis experience years, it is very rare you're going to hear me be excited about any regulatory developments.
Certainly in advance. You're going to be surprised maybe, but you're not going to front run it.
I am excited about regulatory changes when they happen. I'll be like, oh, this is exciting that we got this regulatory change. But you'll probably never have me on here like, I'm so excited that Schedule 3 has been announced for the third time.
Right.
Or like, wow, like they are doing a review of the excise tax stamp.
Right.
For 2056. Like, I think this is the industry we chose. We knew what the regs were. We hoped that they would change.
Yeah.
We have to be prepared to deal with what we have. You hope eventually common sense will prevail. There's only so many industries that Canada has and has an advantage in, and with auto herding, like this is something that you would think would be leaned into, and logically you should lean into it. It would help a lot. It's there's probably a window before other countries, and it's not just it's from the narrative, because there's this maybe especially now with like losing in hockey, that there's this like Canada versus the U.S. narrative, and we need to make sure that we start winning in internationally before the U.S. comes. But it's not just the U.S., right? There are plenty of other countries that are going to and want to ramp up. So you would think that the government would lean into it. But the nice thing about being in the position we are is like, whether we're like a Canadian company or international company or global company, however you think about it, we just have to look and see where regs are favorable and invest in position accordingly.
Elbows up. Elbows up for cannabis. See, this could be a whole new campaign for Canadian licensed producers that they lean into. I'm going to register the domain right now.
Look, we'll take care of whatever markets we're in, but like there's a lot of countries that are going to be more welcoming, and like, we want to build this and we want to help you over, and that's, I hope I'm looking forward. Any country that can help advance us, we need, as a company, as an industry, we need any advantages, we can get. So I certainly hope Canada leans in. I hope Netherlands and Israel and UK and Germany. I hope everyone leans in, but whichever leans in first, I think you're going to see capital flow.
You'll get the spinach.
Yeah.
Well, we're coming up on time, Mike. I appreciate it. We'll probably see you in a couple of months or 4 months, if that's our 3 months. Is that how it rolls? But I appreciate the time, the insight, the candid nature of which you join us. So thank you for that and for joining us today on behalf of Jeremy. Hey, Jeremy. Those of us that follow us closely, we'll be back. Jeremy and I will be back at noon Eastern for This Week in Cannabis Live with our friends at High Spirits and Cannabis Musings. So check us out in about an hour and a half. Mike, thanks again. Jeremy, we'll see you later.
Awesome.
Thanks, everybody.